Hi Ripsters! Welcome to the 2021 Q3 financial update. This time in English, because this will be published on the blog as well. First of all, dear blog readers, I know it's more than 3 months I haven't published anything, and that I'm extremely sorry for it, but trust me, the blog is not dead. The blog is definitely not dead. I have several ideas. I have 2 half-written posts that I want to finish and publish. So please bear with me. I'm gonna be back. I'm back soon. Well, soon, not exactly soon. My family is going to grow in. I don't know when I'm going to publish this video. Probably on Monday 11th. So my daughters are expected to come roughly at this time. So family is growing, and so I'm not sure how much free time I will have in Q4. But I commit to get back on the blog because I miss it. I miss writing. I miss the research that I conducted when writing a new post. I miss written content. So I'm coming back. Okay, so let's deep dive into today's topic, which is financial update. I wanted to do a live stream in English language on the last day of September 2021, but I was extremely tired. I already had 2 live streams on my YouTube channel on the 2 days before, and I was going to go on TV the day after, so I couldn't make it. And here I am on October 8th, trying to do a Q3 update. Let's analyze things. I'm not going to answer questions because this is not a live video, of course. And I know that many people are asking me to follow up on the It's a Mess blog post. And the problem is that it is still a mess. It's still a mess, but it's getting addressed and hopefully resolved soon. I'm quitting my job. I've announced I want to quit, and I'm sending the resignation letter. So I'm actually quitting my job. And so the resolution is quit and try to work on my projects and see what happens. Do I look like a guy with a plan? Not sure. So yes, I will probably start a GmbH, so a limited liability company, before the end of the year, and let's try it. Why not? I do not have any sustainable business plan. so that's gonna be fun. Family expenses are growing each month, and then now we're gonna see it, and I expect them to grow even more in the following month and years if we are staying in Switzerland. So that's still a variable in the larger equation. I don't want to turn myself into a sales machine, an affiliate machine, a referral machine. So I have like a high level of standards for how I want to monetize what I do. But I will have to monetize something. I'm gonna try to be as nice as possible. Let's see how it goes. I will also not turn into a service machine. I'm doing services. I'm doing 3 different kinds of services. You can find here on my blog. There is a button service. I offer personal finance consulting. I offer career development consulting in the STEM board, and I offer mock interview service. So if people want to try an interview with the larger companies, like with the huge tech companies, I can help them. Having said that, selling my time is not my long-term goal. It is nice to see a cash flow coming, and we're gonna see how much I earned in services in this quarter, which is not a bad sum, but it's of course not enough to cover my expenses. But I don't want to do something that don't scale much. So I want to do things that scale a bit. Not a lot. I'm not going to launch a startup, but I want to write a book or more books. Actually, I have several book ideas in my head. I want also to take back on the early retirement European guide sooner or later. So stay tuned. I might want to launch some self-paced or cohort-based course. I don't know it yet. Maybe some kind of membership, Patreon, Substack. I don't know. I don't have a plan at the moment. I don't have a financial plan. I want to grow my YouTube and Twitch audience, which are mostly in Italian language. My content is mostly Italian language, but I will keep a niche for English content, like this video. But yes, so I will see. I might want to write some software in the near future. I'm actually getting excited about writing software. I've done a couple of videos about it, and I like it. I know I like writing software when it's not for like a regular job, but for my own sake. I don't know. I'm getting interested in few niches in software writing, so maybe, I don't know. So yes, for those who were curious about the It's a Mess blog post and what happened next, it's still a mess. It's still a mess, but I'm gonna try to stay here, get some passive income and passion income, and maybe at the beginning burning some money of our reserve. But that's okay. We always have a plan B, which is going back to Italy. So I'm gonna try it. In a few days, probably if you're watching this video, maybe my daughters are already here, and let's see how things go. And yes, okay. So done the preamble part. Now to my net worth. So how was Q3 financially? Let's go to my net worth document. Of course, if you are on my blog, you already know how to find my net worth document. I think there is also some shortcut if you go retireingprogress/NW, capital letter, and you go to my net worth post, and here you can find the spreadsheet. You can find the spreadsheet, Google Sheet, whatever. There is also a nice 5-post series on Spreadsheet. If you search for Spreadsheet on my blog, which is retireingprogress.com, here you can check how I track my finances with Spreadsheet, and there is the category Spreadsheet. Here you can find all the posts, part 4, part 3, part 2, part 1. Good luck with that. I like my Spreadsheet posts. And yes, let's go through it. Here it is. July, August, and September. I removed the October column for those who were curious, because I want to first talk about the last quarter. Even though we are already in October, I will add it back at the end of the video. How did the month go? Well, it depends on which currency you want to measure it. Since my reference currency is the Swiss franc, in Swiss franc, this quarter has our net worth went up by roughly 42,000 Swiss francs. So quarterly, this quarter, plus 42,000 Swiss francs. Last quarter has been a meager quarter, and our net worth went up by just 25,000. But Q1 was amazing. In Q1, we really skyrocketed. Our net worth went way up. So Q1, amazing in Swiss francs. Q2, so-and-so. Well, actually, not a good quarter. Q3 is plus 42,000. So net worth went up, thumb up. But of course, I've been earning money, spending money, saving money. So did our net worth go up by more or less than our savings? We will discover it soon. Measured in euro, the upside has been even stronger, because the euro has been weaker during this quarter. As you can see, my absolute performances strongly depend on currency fluctuations and in which currency do we evaluate our progresses. I used to care about euros first, and then second Swiss francs. But since we live in Switzerland at the moment, and we don't know for how long we're going to live here, I now want to focus mainly on our growth in Swiss franc. I said it several times. Those numbers, like this is the net worth growth. This is net worth growth in percentage, and here is the absolute amount of wealth. So our total net worth in Swiss franc at the end of September, it was 1,500, like 1,547,000 Swiss francs. So more than 1.5 million. So during this quarter, we crossed 1 million. No way. It was already above 1.5 million at the end of June. Okay. But we crossed 1,400,000 in euros, and we crossed temporarily 1,700,000 in Swiss dollars, but then the dollar has been pretty strong this quarter. So in measured in dollar, our net worth went up by only 33,000. So a strong dollar, which is good for us, is good. A weak euro and a so-and-so Swiss franc. That's it for net worth change. As I said several times, I don't own both 1,400,000 euros and $1.5 million and $1,600,000 US dollars. No, that's the same amount converted in the other currencies. So we are $1.5 million in Swiss francs. Across the entire year so far, as you can see here, the current net worth growth in Swiss franc is 170,000 Swiss francs, which is a pretty good year. In next quarter, we will have a yearly review and we'll compare year by year with the past and see how did it go in the last 2, 3, 5, 10, 20 years. But let me tell you, this is probably going to be so far the second best year in our net worth growth. Okay, let's analyze the market. So that's how our net worth grew in this quarter. How did the market perform? Here I have only tracked the assets that I own, and I'm going to discuss in the investment session what do I own and what new assets joined the party this quarter and why. So what happened? VT, which is my favorite ETF about world stocks, like all country world, all caps stocks by Vanguard, actually went down from 103.61 to 101.83. So the global stock market went down this quarter. In particular, last month, in September. In September, the market went down almost everywhere. It's been a rough September. As you can see, it's red everywhere. And if you compare with the end of June, everything is in the red. Everything except Sony, one of my stock pick, which is doing good. Good. Actually, I can do this, which is plus 7% last month. Okay, new entries, which is Intel. Intel joined the party because I was selling options on Intel and I kept rolling them, but then it got exercised before expiration date, and I had to buy Intel at 60. I was selling. I mean, it was my not a very profitable option selling, but overall my option selling, I will do a report at the end of the year. So far it's in the plus 6,000-7,000 US dollars. So I'm making profit selling options, but that's been the biggest loss. So I sold 5 contracts. So I had to buy 500 Intel stocks at 60, so $30,000. I actually want Intel. I like Intel. I want to have Intel. But I paid 60 for it, and it was at 54 when I paid for it. I'm 53 something. So I'm still losing money here. And then I have another individual stock, which is like a weird bet. I have a couple of people. it's complicated. That's a bet. I don't want to shield it. I mean, I'm not doing Wall Street bet kind of things. But it's a meme stock. It's actually a nice, interesting project. It's called Check Cap, and they are trying to pass the trials to get approval for a cancer diagnosis instrument that you ingest. You ingest a pill, and then the pill passes through your guts and then monitor if you have some kind of cancer. And they are doing trials, and they are losing money since 15 years. But if they pass the trial, this might skyrocket. So it's a fun bet. So the market actually went a bit down, roughly everywhere. My shitty US bonds are like going south, giving dividends, but going south. And currency-wise, as I say, the dollar got strong compared to both euros and Swiss francs, and euros is the weakest of the three this quarter, which is good for me. And also my crypto investment took a bit off. The Polkadot that I bought at a pretty high price, at around $30 per dot, then went down. I kept buying while catching the falling knife, but now Polkadot is up again, and that's amazing. It's actually now at 34. It's higher than this, but we are in October, so my crypto investments are in the positive. I only own Polkadot, so yeah. Okay, that's for the market overview. Let's check investment. So here in my net worth, the first section is about stocks or stocks ETFs. As you can see, I own several ETFs, which are trying to respect my ideal asset allocation. So let's first go to my ideal asset allocation, which is this tab called long, short, and fun. There is a reason why it's called this way. The reason is no more valid, but I like the name, so I keep it. As you can see, I have an ideal stock allocation and an ideal bond allocation, and then some fixed amount, which is 100,000 for cash and 35,000 euros, Swiss francs here. That's just for fun, so I can invest it in things which are highly speculative, and I'm okay with that. So that's the target, that's the ideal. The real situation is this one, which is not very far from my ideal on a larger level, on a asset type level. Where does this 58.5 and 41.5% stocks bond split come from? I use a formula which is CAPE based. So the larger the CAPE, the cyclically adjusted price to earning ratio of the world, of the all country world index, the larger it is, the lower my stock exposure. I want to be less invested in stocks when markets are hot, and more invested in stocks when markets are cold. The problem is that I put arbitrary lower and upper bound of stocks, so I don't want to be invested less than 50% in stocks. So 50% is when the market is hot, super hot, ultra hot. And of course, the upper limit is 100%. So if the market gets really cold, so if the price to earning ratio drops a lot, which means stocks are cheap, I want to be more invested in stocks. The limit where the proportional part of this curve is between CAPE 10 and CAPE 30. Now, CAPE in the last years has been floating around above 20, so maybe I need to rearrange the shape of this curve, but overall I'm pretty happy with this. So when stocks are highly priced, I want to be less invested in stocks. Now, the complaint is, what if CAPE equal to 50 will be the new standard in a while? What if we are okay with paying 50 times for the earning per share of each stock? Well, let's see if we go there. If we go there, I will readjust my intuition. But for me, 30, CAPE at 30 is a kind of absolute level of stocks being highly priced. So don't look at Tesla. So where do I get currently the world cap is 26.6. I use this research affiliate, which is a nice, it's a nice website. I go to CAPE ratio, I take multi-country, all countries. Here it is 26.6. They update it frequently. As you can see, the Asian markets are less expensive. Developed markets are more expensive. If you go to individual countries, you go to US, large cap, it's crazily expensive. It's like 38.1. Small cap are like devastatingly expensive. Anyway, the world CAPE is 26.6, and so that puts my red dot here at 58.50. As you can see here, I put updated to 60. Maybe I want to do some change. But so here, target stocks allocation 58.5, target bonds allocation, so the difference, to go to 100. And I consider other asset classes as fun money at the moment. If some asset class will get promoted to dignity level of being part of the cake that sums up to 100, I will review my formulas. But at the moment, the other asset classes that I own, which is cash, here it is. In cash, I aim to a fixed amount, not to a percentage of my wealth. Or if it is crypto or private equities that I own, that's part of fun money. So I don't aim to a specific percentage, but I want to play with a fixed amount. Why 35,000? I don't know. It was 3% of my wealth when I wanted to start doing this. I think so. I can change it to 30,000. If I change it to 30,000, what will happen? That you will get 5,000 more on these two categories. So these two numbers will grow up by this by 3,000, so 21, and this by 2,000, so minus 20. Let's check it. If I want to reduce this, more or less, exactly, yes. And let's be conservative. Let's only aim to 30,000 in fun money. Between stocks, among stocks, here is my target asset allocation, which is 35% world, another 50% world here, but value/high dividend. So essentially 85% is world, 35% is plain world, all cap, whatever, VT, Vanguard VT. Plus also I consider my pillar 3A be part of the world, invested in a world. Another 50% is high value, is a high dividend of value, and I use ETFs, which are VTV, VIM, and VIMI for the international part. And I also consider my stock picking part of these buckets. So Coca-Cola and Intel, I consider them part of value stocks in US, and Sony part as value stocks in the non-US, in the like ex-US. The remaining 15% of stocks allocation is small cap, and small cap, I would love to aim to small cap value. So as you can see, I'm not a value investor. I'm an investor in the value factor, which is different from a value investor, which is one who does due diligence and picks stocks. So I love to get exposed to the value factor according to the 5-factor model. And so I would love to get exposed to small cap value. So I found small cap value US in VBR, Vanguard VBR, and small cap ex-US. I didn't find any value ETF for small cap outside the US. So I just stick with a small cap ETF for stocks outside the US, which is VSS. All still issued by Vanguard. As you can see, all my ETFs are Vanguard ETF, which should raise a bit of a flag. Too much concentration in one issuer, but I love Vanguard and I know the structure of Vanguard, and that's pretty safe. That's as safe as you can get. There's nothing safer than Vanguard, I assume. Not even governments, I guess. So what happened during the quarter? As you can see, I bought a lot. Now, back to the asset allocation. I'm close to my ideal asset allocation in terms of stocks bond split, which is good. I spent the entire year 2021 moving back from like a lower stock percentage allocation back to my ideal stocks allocation. It took 9 months, but I'm there. I'm almost there. I still need to do some change with bonds that I will discuss later, but I'm almost there in terms of stocks versus bonds. I bought a lot. I bought a lot of VT during July, August, September. I buy VT in packs of wow. In September I caught the falling knife and I bought 600 VTs, which is roughly 60,000 US dollars. So I'm buying VT a lot, getting back after having sold at 80 in August last year. I'm buying it at 100, 106. Holy crap. Yes, it hurts, but better to swallow the pill and buy. I also bought other ETFs to compensate for whatever. As I said, yes, in VYM, which is US high yield dividend, I actually bought 100 of them at 105 because I was selling put options and one expired at strike price 105, but the market price was 148.486, 104.86, which is good. I probably made money even in this on this option selling. Yes, a lot of things, and here I'm selling call options on Coca-Cola, whatever. Here Intel, as I said, I got a short put exercised at strike price 60, while current price was more or less 53. So the immediate loss was $3,000. But it's not going up. Will go up. And I bought my check cap, 3,000 check at roughly 1, 0.9, 0.8, something. Okay, cool. My third pillars, they are doing good. Of course, they're losing some money because they are invested in FinPension, 100% stocks. The strategy is Global 100, and they're doing their job. They're tracking the index, and that's okay. It's okay. Where is it? Check if Mrs. can deposit something. Sadly, she can't. So let's remove the note. That's sad. I should have done while my wife was still working in January and February. Okay. As you can see, we own collectively roughly 115,000 Swiss francs in Pillar 3A. It's an invested Pillar 3A with FinPension, and also my wife has a very, very small second pillar transferred into a vested benefit account with VIAC, and it's pretty small. It's also tracking the world index. She's investing in Sustainable 80, and that's it. Bonds. Let's talk about bond. This is the second pillar. My second pillar is growing. In July, I got that the assets are larger than expected, probably because they are accruing some interest rate. So yes, that's cool. I put into the income part. That's great. And I made a buy-in for Pillar 2. So I purchased 24,000 Swiss francs of Pillar 2. What does it mean? when it comes to tax deduction, the first trick is to open a pillar to deposit the maximum possible in a pillar 3A, which is 6,800 something. Then the second best tool you have is to do an extra purchase of missing years of contribution, if you can, in your second pillar. Of course, this money will be invested poorly in the second pillar, so they won't grow much, but they also won't go down. I'm okay. I consider my second pillar the bond part of my portfolio. And if I will quit my company, which I am, I can move this money out and move them into a vested benefit account, or also take it out if I start a company. So I will decide what to do. So just dropping 24,000 and then getting the money out, it's a win-win for tax purposes. So that's great. I don't think I can take these 24K out. They're locked for 3 years. And maybe I cannot even take another 24 out. The tax authority will see it as a tax loophole. So I'll probably just deposit all the money in a vested benefit account. I will split it in two. I will write about it. I will think and write about it. I will probably split the second pillar in two and drop into two different vested benefit accounts. You can. That's absolutely possible. And then I will probably withdraw later, either if and when I will move back to Italy, or when we will run out of cash. Let's see. I will not probably get the money out on day one of self-employment. As I said, not fully convinced this makes sense this year, because maybe my final tax bill won't be that high this year. But I did it anyway. I mean, that's a forced saving. Yes, that's my second pillar as an employee. So as you can see, my second pillar, I have 2084 plus 52, which is 336,000 Swiss francs. 337,000 Swiss francs. I also account for expected taxes on those on this money, which is what I will pay if I will get the money out. So I consider expected taxes as a negative entry in my balance sheet. And that's it. Here, deposits. Those are I consider them bond. They are growing by saving account interest rate like 2 francs in 2020. So they are Swiss bonds that yield at zero. Actually, this is like at least greater than zero. So they are positive Swiss bonds. So let's consider it bonds. And in starting from August, I also have an extra deposit because I started renting a co-working office. So I have a desk in a shared space with other people, which is an amazing place. It's close to where I live. It's like 5 minutes by foot. And I'm surrounded by architects and creative people, which is great. I have an amazing desk. I'm not here now. Now I'm not there now. I'm here in my studio at home. But in my co-working, I like the vibrating environment. I like it. So, but the downside is that I cannot do live streaming like this because it's not the best place in the world. I could host people for one-on-ones, but it's like not always an amazing thing to do. But it's amazing for focused work. So I use my co-working for writing, scripting my videos, scripting my podcasts, and whatever. But yes, another 300 Swiss franc deposited. I'm paying 275 per month, but they asked me for 300 deposit, and that's okay. This is my Italian postal certificate of deposit, which are growing amazingly at 6% per year until 2023. Let's hold it. And then there is my US bonds. I'm selling it each month, as you can see here. Sold 500, sold 500, sold 500. I'm close to my final allocation in bonds, as I said, but I've studied a bit. I want to diversificate within bonds. So instead of just having 100% on short-term US bonds, I will only keep 30% of the floating part of my bonds allocation in US short-term bonds. And I've selected 3 other ETFs, bond ETFs I want to buy with different percentage, which is another 30% of global aggregate hedged in Swiss francs. Because like the most painful part of having US bonds is that you are, well, they're not earning anything. That's one side. And they're also bound to US dollars, which is volatile compared to Swiss franc. So I want to get global bonds currency hedged to Swiss franc. I also want to have global high yield corporate bonds hedged in Swiss francs, which is this ETF. I found that I like it. And I also want to buy some emerging market government bond, and VEMT, Vanguard again, is my identified final ETF. And those are the asset allocation. As you can see, I'm not invested in them at the moment, but I have a target. So here in the bond side, I need to sell a lot of BSV, but they are dropping these days and I'm reluctant to sell, and buy other ETFs. So I'm gonna probably in the next quarter move money around in the bond world. Of course, if the stock market would drop, then my asset allocation formulas will tell me, hey, you need to invest more in stocks and less in bonds, and I will act accordingly. I will sell bonds and buy stocks. That's it. If you are wondering why does a sane person own bonds in 2021, that's a good question. They're not the funniest asset to own, but maybe there is too much fear mongering around those tools. In the end, they might resurrect, and let's see. I want to own some bond. I'm okay with not having amazing returns. I'm okay. I mean, they smooth. It's like the Nutella is good. I love Nutella. I love chocolate, but you also need bread around Nutella. And I'm 45. I fear that my career is probably running out of energy, and I'm risk averse. If you are 20 years old, do not do what I do. I will not suggest you to do what I do if I will help you. Okay, cool. So that's for the bond part. Okay. That's it. We can take a look at the net worth by asset class here in this tab. As you can see, okay, now October went to 0. Here the blue part is the stocks exposure, which you can see is going up. The red part is the bond exposure. At one point, I own more than 1 million euros. Now this tab is euros in bond. Crazy. As you can see, I'm selling it, and I'm buying stocks. At the moment, at the end of September, I own 750,000 euros of stocks. In percentage of my portfolio, I'm more than 50% in stocks. That's percentage of my wealth, not portfolio. Percentage of my net worth. So my net worth is more than 50% in stocks, roughly 40% in bonds, which includes second pillars, which is the vast majority of it, and 11% cash, 1.5% crypto, and something else. But in absolute amount, I've never owned that much stocks. Even when I was more exposed in stocks in percentage, like in April 2019, I was much more exposed in stocks in percentage. Here you can see 62%, but in absolute terms, I owned roughly 600,000 euros in stocks. Now I'm way more exposed in absolute terms to stocks, and I'm starting feeling not that comfortable because daily swings are in the 5 digits, and daily swings in the 5 digits, I don't like it. So let's see how it goes. Back to the main spreadsheet. Cryptos. Here I have a lot of polka dots in staking. I bought few more in July. I bought a lot of dots at 10 euros. Okay, here I'm tracking euros because I deposit euros on my Kraken account. I use Kraken, and I'm buying .euros. So here, I wish I bought more at 10 euros. I actually had more money ready to get in, and I was like trying to buy at every halving of the price to buy the same amount of dots, so halving them at the price, the amount invested. But then dot bounced back, and I said, okay, let's buy even at 26 euros. Who cares? At the moment, I own 908, which it's already more than this because dot has a nice staking reward scheme. So I own more than this. My current balance of crypto investments is like I'm doing good. I like the project actually. I don't care about dot. I mean I do care about dot. I don't care about the return at the moment. I like the project. I'm starting learning more. I might want to start writing some code in this field. I know that I've dropped shit on many on the shitcoin and also on the Bitcoin and Ethereum. I think that there is potential in some of the ecosystems that are getting started on the crypto world. I'm not a huge fan of the first few cryptocurrencies that were alive, just because for me they are the pets.com of the crypto world. But there are interesting projects like Solana, Polkadot. I don't like Cardano; those are like part of the old era. Dot, Solana, few more, not many more. Oh yeah, I also own 200 USDC. USDC, yes. Why I own USDC? I wanted to play with MetaMask. I wanted to start doing something, and I wanted to move some USDC on MetaMask. But then I discovered that Kraken has a horrible $7.50 fee for withdrawing USDC. That's crazy. I mean, where is the revolution happening, guys? $7 to move my money from one place to another? Are you serious? That's the revolution? Okay, cool. Wow. Sorry, but Visa for a wire transfer wouldn't have costed me 7.5. So I've not moved the money out of Kraken and into my MetaMask yet. I want to do that, but I hate fees. As you can see, I hate fees in general. So fees are the shovels that are being sold to gold diggers, and we all know that who sells shovels is the one who makes money, and I don't want to overpay for shovels. I will move somehow. I will find a way anyway. I will also move the dot out of the Kraken account. Do I have an exit strategy? Well, I don't know. I like the project, which doesn't mean that the price is currently okay. The Polkadot market cap is $33 million at the moment, which might not make actual sense. But yes, I will exit if the price will go too much high. But then I will still follow the project. Private equity, yes, I own a few shares of Rome Research. They are, I don't get like the price is fixed. I don't know if they're worth more or less. I don't know. Cash, nothing too special, nothing to discuss. I have too many bank account in Italy, in euros, in Interactive Brokers, Revolut, PayPal, Stripe, Kraken, Euro, cash bills, Swiss franc. I have too many bank accounts, and they're doomed to grow. And every bank account or brokerage account, I own several currencies, and it's a mess. I was also thinking, why should I track the price of DOT in dollars? Why can't I use DOT as another currency and add it in the summation in all the formulas, just some currency, different currencies? That would create a mess. What I would do with USDC, the currency should be USDC. Come on, that's okay to consider them dollars. Maybe. Okay. Oh, here's something nice. Boston Private Bank. Yoo-hoo! As I said in the last update, I wanted to buy 10,000 US dollars worth of Rome Research share when they opened this opportunity to the believers, so to those who are under the believer plan. They only limited my share, the possibilities for me to buy shares at $1,500. So they parked my remaining 8,500 something into a Boston private bank. It took me 3 months to get the money back, and finally on July 14th I received the money back. It took two months and like $20 fee to get the money back. So this is like it's just it's gone. And yes, for a while I hold like a huge cash position on Interactive Brokers. Now things are getting better. Okay, taxes in this quarter. I finally closed the 3 missing years in taxes. I can finally next year kill a lot of rows in my spreadsheet. So what happened? Let's recap what happened in the last quarter. The last quarter I was able to close 2018. The final cantonal bill arrived, blah blah blah, a bit unfair, I won't complain, blah blah blah. But anyway, I was expecting negative 5K, so plus 7.4. Amazing. I got money. Yep. Blah blah blah. Here in Q4, expected tax 2017 on July 14th, final calculation for Bundessteuer 2017, so the federal tax, in line with my declaration, which means my accumulating ETFs, they haven't been taxed. That's amazing. And so I got an immediate boost of plus 3,700 Swiss francs in my expectations. I was expecting minus 8,000, but then the cantonal bill said, oh no, you're pretty much good to go. And then in September, I received the final city and cantonal tax bill. The federal said, you are not going to tax your accumulating ETF, so instead of minus 8,000, you should expect minus 4,000. But then the final arrived in September, and it was minus 4,132, so another like tax saving of 350 Swiss francs. So year 2017 closed, and I paid my duty of 4,000 Swiss franc instead of 8,000. Cool. Tax year 2018 has already been solved in May. Yep. Tax year 2019, they communicated to me in June the provisory tax bill, blah blah. It's a bit complicated. I already explained last time. Corrected my income deduction, blah blah blah. I paid the final tax bill of 3,777 instead of 3,923, so less than expected. Okay, cool. but it was higher than expected because they corrected my tax declaration in June. So I was expecting to get money back. Okay, no, so it was a bad thing. So I received less money than expected, but they didn't pay me. They rolled this money as a credit for 2020. Assholes. Give me the money. Give me the money. Tax year 2020. What happened? What happened? In July, of course, I increased. I was expecting at the end of June, based on my calculation and based on the accounts already paid, on the provision. Wow, it's been complicated tax year 2020. Let's try to unroll it. At the beginning of the year, I thought my expectations was I'm in debt with the tax authorities, cantonal, city, and federal, by 12,278. Then what happened? In March, I paid in advance of 7,111 Swiss franc as a provisory Bundessteuer, federal tax bill. So as I paid that, I know that I already have to pay another 5,000, more or less. Then what happened in May? In May, some money from 2018 taxes here has been rerouted to 2020. So I said, okay, in 2020, now I should get back 2,000. Cool. Nothing changed in June. In July, some other money rerouted here. That's missing a 7. That's missing a 7. So the final 2018 has been rerouted to 2020. So now in 2020, I'm above. I paid 6,000. I'm 6,000 in credit to the tax authority, but I haven't done already my tax declaration. So what happened in August? In August, I filed my tax declaration and discovered that, hey, I need to get back much more, 15,000, and that's amazing. Which means it's 9,000 more than what I planned, which is amazing, which means that I've been pessimistic in 2020 for taxes. So in 2020, I was expecting to pay all my net worth document in 2020. Here, where I account for taxes 2020, I was overly pessimistic. I used to expect a 17% tax effective overall average tax rate. So I've been pessimistic. I've been paying much less than that, roughly 14%, I don't know. So in 2021, I'm accounting for a 15% tax rate, so maybe that would be pessimistic as well, which is good. So what happened? In August, when filing my own tax bill, filing my tax declaration, I discovered I have 9,000 more money credit, and so I consider this amount as income, because that should be income in the last year, but that's a hell of accounting. Of course, this is not final. It's not finished. It's actually just started in 2020. It's not finished at all. They will correct it. They will... I don't know what happened. That's just my tax declaration. It might take, it might take 1, 2, 3 years to get the final amount. So that's a story of how taxes, a single tax year moves around the years and changes and gets like crazy. In Zurich Canton is this way. Other cantons are much simpler and they are much more efficient in this. So you will do your tax declaration in March, and then by August they will tell you that's final and let's close this. In Zurich they are slow. They used to be slow. Maybe that's changing. In this quarter I received 3 2017, 2019 and 2018. I closed all the previous tax years. That's amazing. I also zeroed the US withholding tax credit 2019. I'm not sure if they already been accounted in 2019 tax return. I'm not following everything, so I don't know. I know that Interactive Brokers returned me some money for 2019, so I don't know, 2020, I don't remember. So I'm actually reluctant to consider withholding tax credit. So when I pay withholding tax on US ETFs, I account for credit, but maybe this is bullshit. I'm not going to get this money back from the IRS, but I'm accounting for withholding tax in 2021, but probably I won't get all this money back. So maybe this is also wishful thinking. But I'm paying a fucking lot of withholding tax. So whenever VT distributes dividends, the IRS takes 15%, and I hate it. I want to get them back, to get it back. Okay, so but that's maybe wishful thinking. So tax-wise, as you can see, I have a huge hole in expected income tax 2021. So those are the expected income taxes in year 2021, current year, which they are based on my revenues, and an expected 15% tax rate. So maybe that's pessimistic. And I only paid one single advance in May. I might pay a second one to go to 22,000. So I expect this number to reach 33,000 by December, minus 33,000, plus also some wealth tax, which is complicated to explain now. This is like expected wealth tax, so the tax on wealth. So it makes sense to do another 11,000 advance, but I'm pretty sure they're going to roll this 2020, the huge amount I need to get back. They're going to roll it to 2021, so maybe I will overpay tax. On overall, my expected situation with the tax authority is taxes plus 3,000. So I'm expected to be in credit. So that the sum of this number is plus 3,000. Yes, I have a huge debt for 2021, maybe, but I have credits for other tax years. Okay, cool. Too much about taxes. In the other section, okay, what is here? In the other section, I put other credits or liabilities. As you can see, there is the Cumulus MasterCard. So this is the credit card. And you always see a negative amount, but it's not a balance that I carry over every month. It's just that this will get paid in full at the beginning of the month after. So at the end of a month, I'm usually in debt with the credit card. And then in the first 5 days of the month, I will completely pay. I will clean the debt and then restart accumulating start paying with credit card, so accumulating new debt. But I will never. I'm never overdrafting. I never paid 1 cent of interest in my credit cards. And then I have some credits, which is like referral credits for FinPension, for example. This is different from the fee credits, so it's complicated to explain. YouTube credits, so I'm getting money from YouTube, so they are paying me, but I also accumulating credits, so that's the amount. Here, that's complicated to explain. Other credits in general, Twitch. Incredibly, I'm not in the leaked Twitch documents. I don't know why, with like $100. As you can see here in September, Coca-Cola paid a dividend, but the ex-div date was in September and the payment date is in October. That's accounting hell and whatever. Amazon credit, that's part from Amazon referral fees, but I also purchased a 60 euros gift card when there was a 6 euro extra gift card issued by Amazon, so I got a 10% return, immediate return on my 60 euros. I still haven't spent those 60 euros, so I still have 66 euros in Amazon gift card. Okay, yes. Inferior. And that's it. That's it for the net worth. As you can see, September has been pretty shitty, but still positive in my main currencies. Despite the market going to shit, despite the market went ridiculously down, and people calling me say, hey, the market is crashing, what should I do? What should I do, bro? Nothing. Look at me, I'm positive 3,000. Yes, that's for the net worth part. Let's go on the cash flow. Cash flow. I hope you're not getting bored. We just started. It's a long video. Cash flow. Yes, blah blah blah. We have a discussion here. Salary is gonna end. It's gonna end soon. It's gonna end now. I'm gonna quit. I'm quitting. Entrepreneurship. I just refactored my spreadsheet. I only had 1, 2, 3 lines. I wanted to split to better understand where the money is coming from. So as you can see, I created few lines, one for each service I offer. This is mock interview, career development, and personal finance. As you can see, so far in the year, personal finance service has been the one that earned me the most. Oh, 9,000. That's amazing. While the other 2 services, they're doing pretty good. That's okay. September has been an incredible month for my, as you can see here. This comment is obsolete. It's not for, it was meant when everything was together. So this needs to be cleaned. Clean notes. Yes. Okay, so now I have 1 row for mock interview, 1 row for career development, 1 row for personal finance. Holy shit, August, the blog and streaming activity earned me more than 5,000 Swiss francs gross, pre-tax. I will pay tax on it, of course, but that's amazing. 5,000. Then September went down, a lot down. I don't know why, a bit depressing. In September, few services, slightly more affiliations, as you can see here, Fin Pension. Interactive Broker stopped paying me referral fees. That was amazing, but that's at a limit of only 30 affiliation in the entire life of an account, which is sad, but that's okay. And donations, 5 francs of donation, 445 euros actually. And then what? Streaming, YouTube and Twitch. So how much is my YouTube activity earning me? In July, August, September, it's growing. It is ridiculous compared to other real YouTubers, but that's nice. In September, 183 Swiss francs. I'm getting paid in Swiss francs. So that's $200 roughly. That's nice. That's growing. On Twitch, I'm much poorer. What is this? This is also deprecated. That was supposed to be when they were in the same clear notes. Okay. So anyway, the blogging activity, I will see in the aggregate data of income. That's it. Good. Dividends. The dividend month, the end of quarter month, like March, like June and September, they are incredibly high distribution month. So in September I got $5,000. So as you can see, in August I got 5,000 francs from my activities. In September, $5,000 from my investments. It's really nice to have other streams of revenue. It's really nice. It's really nice. So yeah, dividend-wise, this year we are talking about 14,000, and I expect December to get another 5,000, while in October and November, just my BSV bonds there yielding me few bid crumbs. So I expect to reach almost 20,000, some 5,000, another 500, almost $20,000 in dividends alone this year. It's not a very high yield, but there's no high yield anywhere. So that's for the incomes and the second pillar. And then there are some extras. I count for weirdness in tax return as extra income. For example, here in August, I consider the 2020 tax return of the jackpot I found that I have of 9,190 Swiss francs as an income event, and an after-tax income event in on the month that I filed my tax declaration, even though I should go back in 2020 and lower the actual tax bracket, and so these are money that belong to 2020 in accounting, but it's okay. I will account this month for me. That's income. Why do I consider income? Because in 2020 I consider taxes too higher than expected, so I lowered my savings in 2020, but they were all virtual. They were like wishful thinking. So I should go there and lower the tax rate, so increasing my net income. I don't do that. I don't go retroactively too much. So I will consider just income now. And in September, several minor things, even better tax than expected in 2017, plus Migros coupon, Coop, Amazon ricarica. 20,000 in September. Before we go to the painful side of the painful part, which is expenses, let's go to the income sheet and let's take a look. Let's kill this for the moment. So here we go. Historical income. Zoom. Okay, that is okay. As you can see, it's not bad, isn't it? It's not bad. Of course, there were Google months which were funnier. I still see those peaks, the Himalaya of my career between 2018 and 2020, around December, January. That's the the Everest and K2 and other mountains of my career. I don't see myself earning again. How much is it? 50,000. But as you can see, that's not bad. It's not bad. This is the 20,000 line. It's definitely not bad. This is the split by source. This huge blue part, which is my salary, is gonna disappear. It's gonna be fun. It's gonna be fun. I only experienced 1 month of salarylessness in May 2016, because I took a month of unpaid leave at Google to do what? I don't remember. I took a month off. I don't remember why. I don't remember. Yeah, I was switching from one team to another, from maps to shopping, and I wanted to do the Italia coast to coast, by foot, by hiking. So yes, I took 1 month of unpaid leave. But yeah, I'm gonna experience salarylessness for a while and see what happens. But as you can see, there are interesting other sources of revenue. Now, the real problem: expenses. Expenses are okay. Let's wait here. Let me Control Z. Okay, so we get this, the column that I killed. Here, expenses. Let's zoom again. Okay, 7,000 in July, 9,000 in August, 8,000 in September. So far, 9 months, 72,000. It's 8,000 per month. There's no way to put it mildly. No workaround. Our baseline just went up. It looks like the ante and the blinds in a poker tournament. It doesn't matter how large your stack of chips is. If the big blind and the ante they are going up, you are less rich in terms of number of big blinds. Yeah. Let's go into expenses spreadsheet. Yeah, that's everything is depressing. Everything is depressing. Oh, July, August, September. Let's put them in the right order. July, August, September. Housing. What the hell happened in August? Health. It's going up. Groceries. Oh, it's looming around 1,000. Transport, dining out. What the fuck are you doing, baby? Yeah. Leisure. Hey, stop giving money to people. Stop. Let's take a look. July. I put some mention here. July 7,000. It's okay, an okay month. It's a baseline month. It's like 7,000. It's now assumed to be the baseline month. Not fun. Yes, I put some mention so I can mention things. Here in July, I bought mr.rip. mr.rip is my website. I'm gonna move the blog over Mr. Rip domain. At the moment, it's a redirect on my YouTube channel. But I gave myself as a gift the mr.rip website. It's like 5 letters including the extension. That's amazing. It's $100, 100 Swiss francs fee, but that's okay. It's okay. Amazing. Here, yes, Mrs. Rip broke her phone, thanks to Baby Rip, and we bought it from Techmania, but then it never arrived. After a week, they didn't arrive, so I canceled the order. They refunded me, but never order anything from techmania.ch again. So I'm sticking with this. I will never order anything from Techmania. Again, I don't know if you're in Switzerland. Let's go to Techmania. See this site? Never order anything from them. Cool. Mention. So I canceled this on the 22nd, and then I bought it on the 28th. The same. It's a Samsung Galaxy, similar to mine. That's what I do usually. Like I buy a mid-range phone, 285 francs. Order from Galaxus, same-day delivery, which failed twice. It failed. Like, hey guys, same-day delivery. You're not delivering. Oh, sorry, tomorrow. Didn't arrive. So it took 3 days. With Galaxus is good. They are pretty good. I buy things from Galaxus, the Amazon of Switzerland. But then I complained, and they refunded me 40 Swiss francs. So actually the phone costed 325, but they refunded me 40 francs. Cool. Other mentions here? No. Let's go on August. August, I have some mention here. Well, yeah, okay. Reimbursed 67 Swiss francs of common charges for 2020, so less fees. Cool. Apartment fees, like common charges, like heating and I don't know, paying for the Verwaltung, whatever. Mention here, office rent. Yes, as I said, I'm renting an office. It's 275 francs per month, but I started on August 9th, so I only paid the fraction of August. Pretty nice guys. That's amazing. So yes, I'm renting. That's another baseline expense. So now on the first of each month, I'm already down 5,400. Cool, but also not cool. I finally purchased a privat, how's it called? Privatversicherung, I don't remember. Household and private insurance. Like everybody was telling me, hey, you are crazy. What happened if you're, I don't know, there are few examples where you really need this kind of insurance. Not sure if they really are that likely, but it's 130 per year with IKEA. I think I bought an IKEA, I don't remember which one. IKEA in Switzerland offer household insurances. And that's okay. Now if everything goes on fire, it's 130 per year. It seems to be a no-brainer for everybody, so I didn't do much research. I bought an insurance. And if I don't do any claim, IKEA will give me 30 or 40 francs as a gift card in IKEA store. That's cool. That's cool. This is both household insurance and private responsibility insurance. I think it's a good deal. I've shopped around for 20 minutes, not much more. New washing machine. Here in Switzerland, you usually don't have a washing machine at home, but in our apartment we have a washing machine that was not part of the renting contract. I bought it from the previous tenant, but then it broke after 2 years, and I replaced it. I bought it one for 500 plus 185 for delivery and disposal of the old one. So a guy from Fust delivered it to my apartment, installed it, and got rid of the old one, and it's 684. Yeah. Another complaint with Fust. Fust.ch. Fust, which is I don't know what's the Italian equivalent. It's a shop where you buy things, essentially furniture, like electro-domestics, whatever. They try to sell you all the time insurance, extra insurance. I say no. We never said they try to upsell us a new insurance for the same furniture. I say no. But then I bought the washing machine, and then I received a letter that say, hey, congratulations for your extension of insurance that I never bought. So I called them. I say, hey, cancel this shit. Okay, I'm gonna cancel. Give me a receipt. Okay, they disappeared. I called them again. We went to the store and say, hey, what's the status of my insurance? They say, oh, it's up and running. What the fuck? I canceled it 3 times. Please cancel it. Give me a letter, give me a confirmation, and give me your name. I mean, we had to fight. They are really assholes. So again, I will never buy anything else from Fust. I have other problems to care about than canceling 5 times the same insurance. Fust, no. Techmania, no. Whatever. Okay, other expenses are a bit of material for the office. So I bought, I think, a large monitor, an external keyboard, and I don't remember, some electric cable, 284 francs. So that's a one-off for, it's still leisure. As you can see, that's not the right category. I will, in 2021, of course, if I create a GmbH, a limited liability company, the expenses, the company expenses will go into their own spreadsheet, into their own balance sheet and whatever. So for now, that's just my personal expense. That sucks. I think I can deduct something, but for now, that just sucks. Okay. Other mention. Here, as you can see in this column, I also sometimes adding something. If there is something I want, some note, and you can see Twint. Twint is the digital payment with QR code here in Switzerland. It's like WeChat, Alipay, WeChat Pay, or Satispay in Italy. It's the one, and I'm getting kind of addicted. It's pretty good. I'm using more than my credit card. If you can see in September, there is a lot of Twint here. Twint. So other notable mentions. Extra Day Cripe. Fuck them. We pay a lot for childcare, and we weren't able to send our daughter to the childcare for like 2 weeks because she was sick all the time. And then 1 week we had a need to send our daughter on a Friday where she usually doesn't go to childcare. They say, okay, we can keep her. And then they send us an extra bill of 120 Swiss francs. Fuck you. We skipped 2 weeks. We skipped 6 days we paid for. Then we ask for 1 day on unplanned, and you send us a bill. Fuck you. 120 francs. Every day our daughter goes to childcare costs me more than the most expensive hotel I've been paying for. This is finishing. Luckily, my daughter number 1 this last year in the childcare. Then we have 2 more twins, 2 more baby coming. I don't want to think about it. Tax return, okay. The consulting fee. Yes, I asked for help to a tax assistant, and I also had an amazing 1 hour long call with her about how to start a GmbH, how to start a company, what are the advantages, what are the tax implications, and she was super nice. So I would totally recommend, if you are in Zurich and you need some tax consultant, contact me. I can recommend her, like, totally. Cleaning lady, yes. Wife is getting big, and we just a couple of times we get an extra cleaning lady. So yes, cool. Yep. September. So August, as I said, 9,100. That's fucking crazy. But we've seen that we had like some extra office, wedding gift, with new washing machine, stuff for office. As you can see, there is at least 1,500 of avoidable expenses or not normal expenses, of fee for tax return, which is like I'm happy to have paid that, but that happens once per year, and that happened in August. So there has been few one-off, but 9,100 for a normal month. August, we didn't go anywhere, didn't go any trip. 9,000, guys, that hurts. It hurts. September, 8,000. Yeah, mention Twint. Yes, I'm as I said, I'm switching to Twint as much as I can. So when I go to a store, I pay with Twint. I don't have any cashback, while I do have cashback with a Cumulus card, but the small expenses, it's much faster with Twint. Yep. Blah mention. Stash is an amazing application. It's a startup, food delivery. They deliver in 10 minutes in 5 municipalities. Mine is included, and they deliver in 10 minutes everywhere. I mean, you are in the like in the park with your friends and say, "Hey, wanna get a beer? Okay, let's order." Pim. In 10 minutes, you get a guy with a bike, and they will bring you food. We got beers in the park, or we want to barbecue. They just order food, and in 10 minutes they will bring you in the park. Like you specify the exact geolocation. That's amazing. 10 minutes, and they have almost supermarket price. Almost. They already changed their price. They changed a bit. Like Coca-Cola, one franc, it was 0.90. They changed their prices, but it's still like you can get a Coca-Cola for 1 franc. It's in the bar you will pay 5 francs. Sitting on a rock you get for 1 franc. You get beer for 1.70. This is like amazing, and they have a lot of things like grill, party, lunch, fit, a lot of drinks and whatever. I love it, and they offered 10% discount if you subscribe to their mailing list, and they offered like free codes, like you could get 10 Swiss franc for free. And so the first time I only paid 30 cents and got 10 francs of goods. I did it 3 times with 3 different accounts. It can also be accountless. So you can create an account. You can just order without creating an account. You put some data, and I got bottles for free. That's amazing. I think I'm gonna use the service even when it's no more free. I got another discount code that I don't remember where I put the card, but that's an amazing service. I can recommend it at the moment. Okay, babysitter. Yes, we are hiring a babysitter that works by the hours. So we are starting getting our daughter number 1 accustomed with the presence of another person, which is, by the way, one of the ladies which was working in the childcare last year. So she already knows her, and it's pretty cheap, and it's okay. It's okay. We need help. You always pay. We pay. You get help. I allowed myself 1 day of a spa treatment, 37 francs at Migros Fitness Park. Yeah. IKEA, 600 francs. IKEA. Mostly baby stuff. We bought baby crib. We bought something for the babies that are coming. There are things which are not baby, but I'm too lazy to itemize entries, so I'm considering everything just housing, furniture. There should be baby, whatever. Charity. Yeah, this is like fun. 2 francs in charity. There's been a family of like guys like using an instrument, a kind of flute, and 3 daughters, aged 8 to 12 roughly. They were like singing, and at one point one of them like flipped a hat and timidly, shyly asked for some money, but they were not asking. They were just having fun, and then I was with my daughter and said, "Hey, just drop this coin. They're a nice person." And then my daughter asked why, and so we spent 10 minutes. I spent 10 minutes explaining to her what's charity, what's money. If we give them, they might have less money, so let's give them this coin. And then she said, "But we only have 3 coins. If you give 1 to them, we are left with 2 coins." I said, "Yeah, but I mean, we have 2 coins. They have 1 coin. We are richer. We can help them." And so she said, "Oh, why don't we give the other coin to another family? So like if having 3 coins was our wealth." It was fun. Yes, I paid that's not worth mentioning. It's accounting hell because I paid for something that my in-laws reimbursed me in the month after. It's an accounting hell, and we don't care. It's too late. Clear notes. Okay, that's for expenses, 8,100. So back to the main sheet. As you can see, 7,000, 9,000, 8,000. Luckily, the saving rate is still high because income has been high, even with some accounting trick. But so far, total income for the quarter has been, I don't know, 60. This is net income after expected taxes. 64,000. Expenses 24. So roughly plus 40,000 Swiss francs. Plus 40,000 Swiss francs in savings. As we've seen, the net worth grew by roughly 42,000, which means market investments and whatever fluctuations earned us 2,000 this month. Cool. So far in the year, that's the roughly 60% saving rate, which is good, but it's gonna drop soon. And That's it. Let's take a look at the historical net worth for the overall growth of our wealth. Of course, you don't see much here. You can see that in US dollar there's been a small drop, but then everything is fine. By currency is not interesting. By asset class, you've already seen it. Income split by type. As you can see, all the RIP activities. This is like after taxes in Swiss francs. Expenses. That's already October included. They're growing. They're stabilizing around 8,000 average. That sucks. They're growing. There's no way to put it. They're growing. Here, they are growing. Income and expenses. This is broken at the moment because I can't sell the October column, so let's remove it. Then we will add it back. Income and expenses. Income is doing fine. The 12-month average is getting back to roughly 20,000, 12-month average. The 12-month average in expenses is fucking growing, close to 8,000. Here is expenses of passive income. So the yellow line is how much can you extract from our net worth if I can extract the safe withdrawal rate each month. When this will cross the blue line, we will be financially independent. We are now roughly crossing the blue line back in 2016. Sadly, we increased our expenses. That's never gonna catch. Years of expenses accumulated. That's one of the metrics I like the most, which is the number of big blinds. This is a metaphor I just came up with tonight, so I like it. And we are not moving much, still 16. So we were richer 3 years ago. We had 18 years of expenses accumulated. Now we have only 16.6 years. Even though our net worth grew by a lot, our expenses grew faster. We are roughly at the same level of 2017. So in the last 4 years, our wealth grew just by the same factor of our expenses. They are growing. We are not any richer. We are richer on paper here. Here we seem richer compared to 2017 November. So here, 2017 November, roughly here. So our wealth was half of what it is today, but we are as rich as we were back then because our expenses doubled as well, which is bad, really bad. Okay. Time to broke. Time to broke is my favorite diagram. So now this is unfair. I just copy September into October. I will fix it after. Time to broke says what happened if I do nothing. I will go homeless. I will be homeless in April 2037. If I do nothing, even if I don't invest, I just get all the money, drop under a mattress, and then wait for the end of the days, we will become homeless in roughly 16 years. If I keep the money invested and let they grow passively based on the average expected return, pretty pessimistic. But that's not the best way to do a simulation. You should do a Monte Carlo simulation, like sample based, not the average based. But if assume a pessimistic scenario where net worth grow by 3.14% per year, investment return that, then we can survive a bit more. If I let the money in investment tools instead of cashing all out and putting under the mattress, we will be homeless in 20 years. If I do nothing else, I just get the money, I let the money invested and pretend to be financially independent, in 20 years I will be broke. But if I keep working on my passions and expecting, what is it, 3,000 per month, which is achievable. I mean, I've done better in August. It's 3,000 is the average for 2021, apparently. If I just keep working on my passion and letting the money be invested, I will probably be broke at age 85, which is it's good. I mean, I can keep doing what I'm doing right now, and even if my income won't grow and expenses won't grow, except for inflation adjustment, I can do this for entire life, assuming I die here before this point. I'm pretty sure I do. And the green line is 1 more year. What if I will just work 1 more year and then do this other scenario? Well, 1 more year would buy me 63 April. 1 more year of accumulation will buy 3.5 years of survival, of not being homeless. Is it worth? Is it not worth? Yeah, not a question worth asking. I'm not going there. The black line is the Ravenna threat that I've explained a few times. I'm not going to explain again. So if we cross this line, this blue line with our wealth, we might go back to Italy. I don't know if we are going to execute on this. And at the moment, this is growing with inflation. So at the moment, we move back to Italy based on the situation. If I keep working on my passion, this crossover would be in 10 years. So I can work 10 years on my stuff, earning money passively through investments, and keep spending this spending amount. And in 10 years, I will cross the line that says, hey, what do you do now? Either get a real job or move back to Italy. This is reassuring. I like it. Yep. And I think that we're done. I don't care about fire metrics anymore. I really don't care. But it says that we might be fine in 7 months. Because every time I reach the fire, according to some definition of ideal monthly target allowance in Italy, for example, I will move the goalpost few steps away. But we are essentially financially independent in Italy if we are okay with spending 4,000 per month euros, which is pretty a lot. But we are nowhere. We are still at 50% in Switzerland, based on real expenses and real net worth. But the formulas need to be adjusted. They are not correct. They are not correct. They don't take taxes into account. They are not correct. So this is just for fun, not fun. Yes. Okay. It's been quite a long video, and that's it for the month. So I usually I'm starting this thing of drinking 1 small glass of either Amaro or whiskey, depending on how the month of the quarter went. I think I'm gonna drink whiskey because I think the quarter went pretty well, even though the last month, September, didn't do well. Been a pretty crappy month. Still positive in Swiss francs, but the overall quarter has been pretty good. I mean, it's been better than the market said. So cheers to me. I've beaten the market apparently in this quarter. So yep, cheers. It's a bit too late to drink whiskey, but yes. So thank you. I hope you liked it. And remember, just a reminder that the blog is not dead. I'm actually writing 2 blog posts. I don't know how much time I will have in these following weeks because babies are coming, a lot of them. But I'm excited about it. I'm excited. Let's see how it goes. I should sleep more. I should save some energy. But yes, I'm back on writing. Expect more blog posts coming. Expect few books coming. Expect me to be more active on my blog. Yep. Okay, guys, it's been a pleasure. So have a nice October. How has your Q3 performed? It's been a good quarter or not? How is your 2021 going? Is it a good year or not? Mine has been a pretty good year so far. And yes, but things are gonna change in every direction on income, expenses, and whatnot. So let's leave this amazing time to be alive. Have a good night, guys. See you. Ciao.